Hello, everybody, and welcome to the 17th edition of LM's Weekly Wrap, our weekly program to cover all the developments which are taking place in the domestic markets, the international markets, and the repercussions across the board. This week is particularly important because we've come to the end of the earnings season, and it's been a very busy earnings season. A lot of results which have been announced by the companies, most of the companies having declared their numbers. And as we always stress that more than the results, it's the commentary which is very, very important, the outlook which is given by the companies, because that is going to set the tone for the future. That is going to give us an idea what is likely to happen in the near future. So this time around too, the commentary has been no different. A lot of companies, they've highlighted a lot of factors which we will be discussing a little later in our show. The international markets have been largely muted, and we've seen in the domestic markets, now waiting for triggers. What can drive the markets? What will be the drivers of markets going forward? Because we've had a very interesting festive season. The festive season has been a kind of a pent-up demand or a revenge kind of a buying what we have seen in the domestic economy. And now come mid of November, we have had a trigger in the form of the winter wedding season. So it's estimated that this time around, from mid November to February 2023, we'll be having approximately 3.2 million weddings which are likely to take place. Now, weddings can have a huge multiplier effect on the Indian economy, because there is typically a huge amount of budget which goes into the buying of gold, diamond jewelry, consumer durables, cars, preparations for the weddings. It can boost the economy in a very, very big way. So this is one factor. Second factor which could have an impact on the rural economy is the Rabi season. The upcoming Rabi season is also going to be an important factor. And come 2023, I think the whole economy will start preparing for the elections in 2024. And till now, we have seen the government's unwavering focus, the thrust on rural development and urban infrastructure has held the economy in very good stead. So I think full marks to the government for having managed the economy through when the entire globe is going through a very, very turbulent kind of a situation. So with me just now is Jash, who's a senior equity research analyst at LM, and he'll be briefing us about the international scenario first. So Jash, yeah.
Thank you, sir. It's great to be here. And as usual, I'll be talking about the international and the domestic markets. Starting with the Nifty 50, we've seen almost Nifty touching all-time highs, about 18,500 plus levels, and it has held above 18,000. Today, we've been seeing profit booking market-wide. That we are seeing the pressure on the stocks today. People are booking profits because they are fearful about the Nifty being on near the all-time highs. But as long as Nifty holds on to 18,000 levels, I don't think we should be very worried. But we should always book profits to be on the safer side, so that we can get a re-entry if the market goes down. That sums up about the Nifty levels, and I'm going to talk about the international markets now. The US data have been good. The job data, the inflation data have been relatively better than what they were expecting. But the commentary of the Feds still remain hawkish, and there are slight indications on increasing the market rates. And that is actually confusing the market on whether to expect the hike of the interest rates or not, because after the data points there was some kind of murmuring in the market that we might be peaking the interest rate cycle. We might see another small rate hikes, and then it will start coming down after a year or so. So it is kind of confusing the market, but I think it's maximum about next one quarter we might see interest rate hikes. That also maximum. After that, we are going to see some stabilization and it going down. Coming to the UK, the United Kingdom, they are seeing the 41 year peak of their inflation. It is at 20%, and it is we've been saying this since past few weeks. 10%, 12%. 15%. Now it's reached at 20%. We don't know where it's going to stop. So that's something that we need to watch. And now coming back to the crude oil. The crude oil prices have softened. We have seen some kind of relief over there. It has at $90 a barrel, which is a temporary relief. We don't know if it will stay here or not, but this is definitely good for India. The 10-year government bond yield is at 3.8%, which is also at a very comfortable position. And coming back to Indian markets, I think what Sir rightly pointed out, the election that is going to be on 2024. So all our eyes are going to be on the 2023 budget. We need to see what policies are brought, what taxation levels are there, and that is what is going to drive the elections and the market. So we are anticipating a very good budget, because that is also a turning point for the political parties. So I think it's going to be very interesting coming Feb and March next year. Till then, I think we might see volatile sessions. About 2-3 months would be volatile. It will consolidate. The market won't go to a very large movements or anything. So that's about Indian markets. I would hand over to Nirav sir again to give some light on the sectoral indices.
Yeah, thank you, Jash. So I think yes, this quarter, the quarterly season which has gone by, the Q2 earnings season, has it has thrown up a lot of points. The corporate sector has been impacted. We've seen the margins and the profitability has been severely impacted on account of various factors like the raw material inflation in particular. We had raw material inflation, we had energy inflation, we had inventory correction issues, we had supply side disturbances, supply side constraints, and we had the rupee depreciation. I think the most important factor again has been the fact that rupee has depreciated by 10% since January. So all these points have been very importantly highlighted by the corporate sector. Most of the companies which are hit by the raw material rising input costs are of the opinion that the raw material prices have input prices have peaked in March 2022, but at the same time the raw material prices continue to be very volatile, uncertain, and at elevated levels. So this gives us a kind of an uncertain picture about the margin trajectory going forward. The second important factor is the energy inflation. Now this energy inflation has also impacted companies, particularly so companies in the cement space, where we have seen that power and the fuel costs have shot up significantly. There's been a huge increase in the freight and the forwarding expenses, which has put enormous pressure on the margins. A lot of companies are there which have been disturbed by the developments on account of the inventory corrections. Now what has happened is that there are a few companies which are using raw materials like PVC, polyvinyl chloride, which has corrected by 40% since the beginning of April. Now such violent and erratic movements in the raw materials has literally put pressure on the margins of a lot of companies, resulted in inventory losses, virtually wiping out the profits for this particular quarter. As far as another important supply side constraints developments, there are a lot of companies which have complained about high shipping costs, high logistic related costs, etc. Not to mention those companies which are impacted by the rupee depreciation. Apart from this, a lot of companies have said that they have been impacted by high working capital requirements also. On account of COVID, companies have had to procure huge amount of inventory way ahead and in advance. There have been huge amount of money which was locked up in debtors. So companies typically had to increase their working capital requirements. When you have increased working capital requirements, naturally you need to borrow more. Your interest costs tend to move up, and all this tends to eat into the margins of the companies. So from that perspective, I would be inclined to believe that I think this has been a very tough quarter. A lot of companies, it's been tough navigating through this particular quarter. Typically, when we have such a volatile scenario and an uncertain scenario, the smaller market players tend to cede the market share to the larger players. So, to that extent, we've seen that the larger players have gained at the expense of the smaller players. The smaller players have had to vacate their space, and the larger players have only got more market share. Now the strategy which will be followed by the larger players is that they will like to concentrate on the higher end of the business. They like to enter into those areas which are more challenging and which are more rewarding from a margin perspective.
I think they all want to increase their margins now. EBITDA
Yes.
margin is going to be the key.
So they want to enhance their margins, and they want to vacate the commodity side of the business to the smaller players. So a lot of changes are happening in the market at this point in time. Last week was kind of a very lackluster week in terms of the market performance. We had very few sectors which really gave any kind of movement. We've seen some dull movement in the auto sector. We've seen some profit booking. Stocks like Mahindra and Mahindra corrected for the second consecutive week. It was amongst the biggest amongst the top five losers for the second week consecutively. We've seen some movement pick up in FII favorite sectors, because FIIs have come back to the markets. They have started investing positively in the markets. So the FII favorite sectors have done well, whether it is banking or whether it is the IT. We are seeing some signs of life in these sectors. We've seen Kotak Mahindra Bank move up during the last week. Axis Bank moved up. HDFC Bank moved up. HDFC Limited moved up. And in the on the IT space, we have Infosys, TCS. They have moved up. Then we have certain stocks like Power Grid Corporation, GAIL, which have moved up during the week. We have stocks like Bharti Airtel and Hero MotoCorp, which were amongst big gainers of the week. But still kind of a confused kind of a movement from the market. No clear-cut direction is available at this point in time. So I think it will be better that we wait for the proper cues to emerge in the market. Market is behaving in a kind of a lackluster fashion, moving directionless or kind of consolidating, to say the best, at the current levels. Today as we speak, there's been correction in defense stocks. We are seeing some correction in railway related stocks, etc. And in a way, some sort of consolidation, some sort of correction is always healthy for the markets, because when we see such correction in the markets, it is a healthy sign for the market. So we've been seeing some consolidation, and it will be safe to conclude that it's a healthy development at this point of time. The commentary, as I have said, we are expecting infrastructure activity to pick up. A lot of infrastructure companies have commented that they remain upbeat about the prospects going forward into 2023. So I think that will be one sector to watch out for. It will also be important to see the prospects of the pharma sector, because we've seen the large pharma players beginning to sound a little bit positive about the domestic market also, as well as the developments in the US markets. Our weekender stocks continue to perform quite well, and you can track those the weekender stocks also. And do write to us about your feedback on our programs, and we will reply back to you, your doubts, queries, and we hope to catch you very soon next week with another edition of Weekly Wrap. So just
adding to that, you can track the weekender stocks on our application LM's InvestMart. So I think it's a very good tool where you can see all the weekender stocks in one place.
So that link also can be shared with you. So
we'll add the link below the video.
Yes. So thank you everyone for a very patient hearing. Thank you everyone.
Yeah.